This is daily success.
Warren Buffett was born in Omaha, Nebraska. From a very young age, he showed a keen interest in numbers and how businesses worked. He was not like other children who primarily focused on playing games. Instead, young Warren was already thinking about ways to earn money and make it grow. This inherent drive was a strong indicator of his future path toward becoming one of the world's most successful investors. He spent a considerable amount of his childhood reading, with a particular fondness for books about business and finance. These books further fueled his natural curiosity and ambition. His parents noticed his unique interests. They provided a supportive environment, allowing him the freedom to explore his budding entrepreneurial spirit. This early encouragement was crucial for his development. Growing up during the era of the Great Depression likely shaped his views on money, emphasizing the importance of financial security and careful management of resources. A pivotal moment in his early life came when he discovered a book titled 1,000 Ways to Make $1,000. He found this influential book at the Omaha Public Library when he was just 7 years old. The title itself ignited a powerful ambition within the young boy. His new goal became crystal clear. He wanted to make his first $1,000. For a child in the 1930s and early 1940s, this sum represented a significant fortune, a seemingly monumental task. Warren didn't just casually read the book, he absorbed its core message. He understood that through ingenuity, creativity, and persistent hard work, substantial amounts of money could indeed be earned. This book acted as a catalyst. It transformed his general interest in money into a concrete, actionable goal, setting him on a path of early enterprise. He famously declared to a childhood friend that if he wasn't a millionaire by the age of 30, he would jump off the tallest building in Omaha, showcasing his early confidence and determination. Buffett's mindset, even as a child, was remarkably mature and focused. He approached his goal of earning $1,000 with a seriousness and a strategic outlook that was far beyond his years. He was not merely daydreaming about becoming wealthy. He was actively and constantly seeking practical methods to achieve his financial target. He understood from an early age that making money required consistent effort, dedication, and a keen eye for spotting opportunities that others might overlook. This business-oriented way of thinking clearly set him apart from his peers. He began to meticulously analyze everyday situations, looking for potential business ventures, no matter how small or insignificant they might have seemed to others. He was keenly observing how various businesses operated, how consumers made their purchasing decisions, and where there might be unmet needs or inefficiencies in the market he could capitalize on. This analytical approach became a hallmark of all his early activities. His unwavering determination was a key factor in his early successes. Young Warren Buffett was never afraid of hard work or facing challenges. He knew that achieving his ambitious financial goal of $1,000 would require a great deal of persistence, patience, and unwavering dedication. This strong internal resolve pushed him to try a variety of different ventures, learning valuable lessons from each experience, whether it was a success or a setback. He was fully prepared to put in the long hours and exert the necessary effort that many other children, and even adults, might shy away from. The deep-seated desire for financial independence, even at such a tender age, served as a powerful and constant motivator for him. He aimed to build his own financial security from the ground up, a lesson perhaps profoundly learned from witnessing the economic uncertainties and hardships prevalent during his childhood in the Great Depression era. This unwavering focus on his clearly defined goal was truly exceptional. Warren Buffett's entrepreneurial journey commenced with quite simple yet remarkably insightful business ventures. He initiated his earning career by selling sticks of juicy fruit chewing gum door to door throughout his local neighborhood. He demonstrated an early understanding of basic economics by purchasing multi-packs of gum at a wholesale price and then selling the individual sticks for a profit, thereby capturing a margin. Shortly thereafter, he expanded his product line to include Coca-Cola, again buying bottles in bulk, often from his grandfather's grocery store, and reselling them to neighbors at a higher price, ensuring another profitable stream of income. These initial experiences were invaluable. They taught him fundamental business principles such as the concept of buying low and selling high, the importance of understanding and calculating profit margins, and the necessity of effective inventory management. He was learning firsthand about the dynamics of supply, demand, and evolving customer preferences, all while meticulously tracking his sales and profits. He further honed his sales skills by venturing into selling subscriptions for popular magazines like the Saturday Evening Post and Liberty magazine, also door-to-door. This endeavor expanded his understanding of effective sales techniques and the nuances of customer interaction. Through this work, he learned how to confidently approach potential buyers, how to present his products in an appealing and persuasive manner, and, crucially, how to handle rejection without becoming discouraged. He was not deterred by doors occasionally closing in his face. Instead, he viewed each interaction, successful or not, as a valuable learning opportunity. Furthermore, demonstrating his resourcefulness, he collected and sold used golf balls. He would find these lost balls at local golf courses, clean them up, and then resell them to golfers at a discount, showcasing his innate ability to identify niche markets and transform seemingly discarded items into sources of income. A more significant and consistent source of income for young Warren came from establishing and managing his newspaper delivery route. Around the age of 13, he took on the demanding task of delivering the Washington Post to subscribers in his area. This was by no means a light or easy undertaking. It required him to wake up extremely early every single morning, often before dawn, regardless of the prevailing weather conditions, be it rain, snow, or shine. He had to meticulously manage a large roster of subscribers, ensuring that each one received their newspaper in a timely and reliable manner. This job instilled in him a strong sense of discipline, personal responsibility, and a deep appreciation for the value of providing consistent and dependable service. He understood clearly that his customers depended on him for their daily news, and he took that responsibility very seriously, thereby building a strong reputation for reliability and diligence among his clientele. The newspaper route provided him with a remarkably steady and substantial income, especially for a boy of his age during that time. He was consistently earning around $175 per month, which was a considerable sum in the early 1940s. True to his frugal nature, he did not spend this hard-earned money frivolously on fleeting pleasures. Instead, he diligently saved a significant portion of his earnings with a clear and well-defined purpose already in his mind, to accumulate capital that he could then invest and allow to grow over time. He also demonstrated his entrepreneurial flair by seeking to maximize the financial potential of his established route. He achieved this by selling other items to his existing newspaper customers, such as calendars around the new year and even horse racing tip sheets, showcasing his knack for upselling and leveraging established customer relationships to further increase his earnings. This proactive approach significantly accelerated his progress towards his initial $1,000 goal. Warren Buffett's keen financial interest soon expanded beyond simply earning money through labor. He became fascinated with the concept of making money work for him through investments. At the remarkably young age of 11, he made his very first stock investment, a significant step for any child. He had been carefully observing the fluctuations and patterns of the stock market, an interest likely nurtured by his father, Howard Buffett, who worked as a stockbroker. For his initial investment, he chose to purchase 3 shares of Citi's Service preferred stock, acquiring them at a price of $38.25 per share for his own account. Demonstrating his early persuasive skills, he also convinced his older sister, Doris Buffett, to join him by purchasing 3 shares for herself as well. This was undoubtedly a bold and decisive move for someone so young, clearly indicating his early confidence in his burgeoning analytical abilities and his willingness to take calculated risks with his meticulously hard-earned savings. This initial foray into the complex world of the stock market provided Warren with a valuable, albeit quite nerve-wracking, early lesson in investing. Shortly after he and his sister purchased their shares, the price of Citi's Service stock unfortunately dropped significantly, falling to $27 per share. His sister, Doris, was understandably worried and anxious about the decline in value, and she frequently reminded him of the falling price and their paper losses. Warren keenly felt the weight of responsibility not only for his own investment but also for his sister's. However, displaying a patience that would become a hallmark of his later career, he held on to the shares. Eventually, the stock price recovered and he sold all their shares at $42 each, securing a small profit of $5 per share. Ironically, the stock later soared to over $200 per share. This formative experience taught him a crucial lesson about the importance of patience in investing and the potential opportunity cost associated with selling too early, a principle that would become absolutely central to his renowned long-term value investing philosophy. Buffett's investment activities during his youth were not confined solely to the stock market. Even as a teenager, he demonstrated a sophisticated understanding of the benefits of diverse asset classes by courageously venturing into the realm of real estate. Utilizing the money he had so diligently saved from his various entrepreneurial businesses, including his substantial earnings from the newspaper route and other small ventures, he made a rather significant purchase for someone his age. At the tender age of 14, he invested $1,200 of his accumulated savings to buy a 40-acre farm located in Nebraska. This was a substantial capital outlay for a young teenager at that time, showcasing not only his impressive financial discipline, but also his forward-thinking approach to building long-term wealth through the acquisition of tangible, productive assets. He inherently understood that land, particularly farmland, could be a productive asset capable of generating ongoing returns. The Nebraska farm that Warren purchased was not just an idle piece of land, it was an active, income-generating asset. And his business acumen was clearly evident in how he managed this early investment. He did not attempt to work the farm himself, lacking the specific agricultural expertise. Instead, he made a practical and strategic decision to lease it out to an established local tenant farmer. This sensible arrangement provided him with a steady and reliable stream of rental income, further adding to his growing capital base without requiring his direct daily labor. This early real estate venture vividly illustrated his intuitive understanding of the concept of passive income earning money consistently without actively working on the farm day to day. It also importantly diversified his investment portfolio beyond stocks, demonstrating a surprisingly sophisticated grasp of financial strategy even in his formative teenage years. The profits generated from the farm contributed significantly to his savings and his journey towards financial independence. Another fascinating and illustrative chapter in young Warren Buffett's early entrepreneurial story was his successful pinball machine business. Always vigilant and on the lookout for new and potentially lucrative opportunities, he astutely identified the growing popularity of pinball machines among teenagers and young adults as a promising avenue for profit. He recognized that people were consistently willing to spend money on entertainment, and pinball offered an accessible, affordable, and enjoyable option for many. This particular venture marked a slight departure from his earlier primarily solo efforts as he decided to partner with a friend, Don Danley, to launch the business. This decision showcased his developing ability to collaborate effectively and leverage combined resources, knowledge, and efforts to achieve a common business goal, an undeniably important skill for any aspiring or established entrepreneur. Their business model for the pinball venture was refreshingly simple yet remarkably effective. In 1946, when Buffett was around 16 years old, he and his friend Don pooled their financial resources and jointly purchased a used pinball machine for the modest sum of $25. They did not have the capital or the need for a dedicated storefront for their new enterprise. Instead, they approached a local barber, a man named Frank Erico, and strategically proposed placing their newly acquired machine in his busy barbershop. Their agreement was straightforward. They would split the profits generated by the machine with the barber. This clever placement ensured a consistent and captive flow of potential customers, primarily people waiting for their haircuts with some spare time and change. It was a low-overhead operation, requiring minimal initial investment and shrewdly relying on an existing business's established foot traffic, minimizing their risk while maximizing their potential returns. The pinball machine business, which they named Wilson's Coin-Operated Machine Company, quickly proved to be a resounding success. The very first machine, strategically located in Frank Erico's barbershop, began generating consistent income almost immediately after it was installed. The earnings from this single machine were so encouraging and substantial that, Buffett and his partner made the wise decision to reinvest their profits back into the business. They used the money earned from the first machine to purchase additional used pinball machines. They then systematically expanded their operation by placing these newly acquired machines in other barbershops and various strategic locations throughout Omaha where people congregated. Each new machine added to their growing revenue stream, powerfully demonstrating the principle of scaling a successful business model. This venture provided him with practical experience in cash flow management and the benefits of disciplined reinvestment for growth. Through the combined and cumulative efforts of his newspaper delivery earnings, the steady profits from his Nebraska farm, his early, albeit modest, stock market gains, and the surprisingly lucrative pinball machine business, Warren Buffett steadily and methodically accumulated capital. Each individual venture undertaken with careful consideration, diligent execution, and a sharp eye for value contributed significantly to his growing savings. By the time he was in his late teens and approaching the end of his high school education, these diverse income streams had successfully helped him surpass his initial, ambitious childhood goal of earning $1,000. In fact, by the time he graduated from high school, he had managed to save an impressive sum of around $5,000, which, adjusted for inflation, would be equivalent to over $50,000 in today's currency. Reaching this significant milestone was not just a financial achievement. It profoundly solidified his business-oriented mindset and laid a robust financial foundation for his legendary investment career that was yet to unfold.